Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Overnight, the US dollar index, which measures the greenback strength against a basket of 6 major currencies, extended its rally on towards the region of 103.60. This triggered a further slide in the market since the blockbuster US job report on Friday, which triggered much panic across the market as investors now try to recalibrate the expectations on how long the US Federal Reserve's hawkish path will need to continue in its quest to fight high inflation. As I mentioned, the dollar index ended up higher. Investors now wait for the US Federal Reserve Chairman Jerome Powell's interview scheduled for Tuesday. And no doubt they will be looking for any change in the central bank's language after last week's data showed services activity was strong in January, as well as US job growth, as I mentioned. In Friday's non-farm payrolls numbers, the US economy added 517,000 new jobs in January, blowing out the 193 market estimate, while unemployment rate hit a 69-year low of 3.4%, according to the US Labor Department. Now, with the stronger numbers, this may signal that inflation could decline too slowly, which could force the US Federal Reserve to continue to hike rates longer. It is assessed that the aggressive bout of interest rate rises that we've seen from the US in more than 40 years will likely continue towards the benchmark rate of around 5%, so that it can squeeze high inflation out of the economy. Looking ahead, though, we do have the Reserve Bank of Australia's monetary policy and interest rate decision is expected to deliver its fourth consecutive quarter point interest rate, or 25 base points, and therefore see a move from 3.1 to 3.35%. It is expected from myself and many people in the markets that we could see a fifth rate hike in March, due to the fact that the recent data of inflation came from at 7.3% to a 33-year high of 7.8% last quarter, more than double its 2-3% target range for the RBA. As we get weaker, we can see that the Australian dollar is getting very close now to the 60-day moving average, seen around 68.2035. I do believe that since that indication from the RSI and the MACD that the bearish divergence kicked in very aggressively, and the dollar also supporting the market slide due to the strength on Friday, is that the Aussie may find support anywhere towards 68.2035. But all eyes on the RBA 230 today, and no doubt it will be a little bit volatile into the number. The euro slipped further and now takes out the key level of 107.4050, which has exposed the region now of 106.20. It is assessed that the market might find a little bit of momentum in terms of bullish coming back from that bottom side of the range, so do keep an eye on it. But if it fails, then we could be looking even lower down towards the region, somewhere around 105. The dollar yen still remains relatively firm and still looks towards its topside target at this stage, around 132.8090, which isn't that far away after seeing an intraday high this morning of 132.70. Reassess from there, as a break would give further scope up towards 134. Sterling still remains somewhat weak and still focused on the key level, that is, of 119.55. I'm not going to get too bearish as we get close towards this region. However, the ADX has demonstrated when it gets close to 40 that the bull or bear trend, depending where we are in the market, and at the moment it's bear, it may actually deplete and therefore see a bounce out of this oversold region. And if so, 119.55 could be the next stage for a rebound back to 121. Since plummeting heavily for 2 days and posting an engulfing candle or key reversal, the market is holding or respectively at 1,860.65. I do feel there is a little bit more downside risk coming, and if so, a break of 1,860 would give scope towards the region of 1,820 to 26, and reassess from there. Any advancement? Well, the market did stage a brief rise overnight, but found from the posted inverted hammer that the resistance around 1,881 may again serve as a short-term cap. Now, yesterday I did have a neutral view when it came to oil. Nevertheless, the market did find momentum around 72.5 and now currently looking back towards 75, 60, 70. I feel that the market may step up before taking the next downward challenge, and if so, may revisit 72.5. But I would like to see how it contests that level of 75, 60, 70, and whether or not we can see a break there or a rejection. Well, that wraps it for the morning. Thank you very much for joining me. As always, look out for the interest rate report and hope you enjoy the great start to the day.